the last, week, there's been some major news out of the United States. The big headline with Constellation and Microsoft signing a very significant, large $20+ billion power purchase agreement and refurbishment to 3 Mile Island. Just again shows the commitment to this sector in order to provide baseload emissions-free electricity for their data centers, to power AI, to power these very energy-intensive facilities.
All right, everybody, welcome to the next big rush. This is Jordan Trimble, CEO of Skyharbour Resources, a company that I personally own, I believe in. They are a project generator and also a junior explorer in the Athabasca Basin, also known as the Saudi Arabia of uranium. And uranium is all the rage now, so let's talk uranium. Jordan, welcome.
Thanks for having me.
So I want to start off with where we are in the market. We try to get these videos up as quickly as possible. And so we have had a lot of different news coming out for the uranium crowd and investors. How do you read the situation where we are right now? Because I feel like there's a little bit of a disconnect. Maybe the stocks are starting to catch some love. But for a long time, we've seen the story getting better and better and better, and the stocks lagging. What is the situation from your point of view, somebody that's been in the business, in kind of the backstage for quite a long time?
Yeah, well, I mean, the summer months, needless to say, were challenging. I mean, it was a fairly severe pullback and consolidation through the summer months, which I think the extent of it was surprising, but not surprising was the timing of it. I mean, we've seen the seasonality with this sector in particular with uranium equities. It's volatile in the summer months as it's typically a quieter period, less contracting, right? Less market activity, and we also had some crosswinds as well. I think that quietly but meaningfully impacted the sector. There was quite a bit of buying that had come in into uranium equities from the AI trade and kind of big tech trade over the last year. My understanding was that it was a number of the kind of larger, more liquid names, and some of the uranium-focused ETFs were included in some of these index funds that were trying to get exposure to the AI and big tech trade. So that the bloom came off of that, as we know, and we've seen a more difficult year, some downward pressure in those various sectors. So I think that also hit our sector as well. Really nothing to do with the fundamentals. It was a bit of a head scratcher, but it is what it is, and I think we're through it now. Just looking at the last couple weeks, it looked like, ironically enough, it seemingly bottomed. At least the equities did at the WNA conference just several weeks ago. So the seasonality, which I just referenced, is picks up in the latter part of the year. If you look at the 20-year seasonal charts of Cameco, of Denison, of Laramide, of some of these names that have been around for a little while, the end of the year, September through December, are very, very strong months. On average, those names are up anywhere from 10 to 20% from the lows in August. So maybe a little bit later this year, given that we're getting towards the end of September, but I think we're in for a very strong end of the year. I really want to emphasize that even though there has been spot price volatility, that's pulled back, and no question that was a factor in the pullback that we saw in the equities. But the long-term prices continue to move higher, and we now have the convergence of the long-term price with the spot price around $80 a pound. And as we've discussed on previous interviews, there has been a bit of a stagnation with the utility contracting this year. We're 45, 50 million pounds of long-term utility contracting thus far. So still a far cry away from the replacement rate that we've seen in previous years, where it's typically correlated with a very strong market and price increase. Now, all that being said, I think that represents pent up contracting. I think we will see over the next 6 months quite a bit of utility contracting, as they're basically pulling on every lever to buy cheap pounds as much as they can in this shorter period of time until, again, the contracts expire, or there just isn't the secondary supply out there. And we know that mobile secondary supplies have very much dried up. We're not seeing that same abundance of secondary supply that we've seen historically with this commodity. So, there is going to be a tipping point where I think, in particular, some of maybe the smaller utilities in the US, for example, that, have flexed up on contracts or have been heavily reliant on Central Asian supply, in particular Kazakh supply. And we could talk about that. Obviously, there's been lots of news out of Kazakhstan over the last several months here. But, these utilities that have been reliant on, these sources of material, that there will come a day where, they cannot be as reliant on the secondary supplies and or cheap, abundant supplies coming from Kazakhstan or other parts of the East. And so when that happens, you could very well see a number of these utilities, step into the spot market. You could see a kind of a rush to contracting, and they typically, historically, you see utilities kind of move in a bit of a herd, right? So, yes, we haven't seen much contracting this year thus far, but when we do see contracting, there's a bit of a herd mentality. At least that's what we've seen historically. So I expect we'll see the same. Now, just in the last week or so here, there's been some major news out of the United States. The big headline being with Constellation and Microsoft signing a very significant, large $20+ billion power purchase agreement and refurbishment of 3 Mile Island, to restart 3 Mile Island. So that just, again, shows the commitment that big tech companies have to this sector in order to provide baseload emissions-free electricity for their data centers, to power AI, to power these very energy-intensive facilities. And so that's just the latest and a very significant milestone, no question, in the sector. So it's big, obviously, in the sense that it's showing, again, big tech's commitment to nuclear, but it also shows the potential for further restarts, right? I don't think really anyone would have expected 3 Mile Island to come back on. So that was a very pleasant surprise. And there's over 20 decommissioned reactors currently in the United States that, not to say that all of them obviously would come back online, but that is, again, something that a source of demand that was not expected, even 4, 5, 6 years ago, with the potential restart of decommissioned reactors in the West. So again, this is just adding to the growing and accelerating demand side going forward. In addition to everything that we've talked about over the last several years, the build out in China, in India, and in the Middle East, the advent of small modular reactors. So it's in a very, very exciting time for the sector, for nuclear energy, and for the uranium miners providing the fuel for that baseload emissions-free, reliable, scalable electricity generation. And just one last headline recently here at the Climate Week in New York, where 14 major financial institutions pledged their commitment to this tripling of nuclear power by 2050. So it's not just the governments now, it's the big financial institutions that are committing themselves to it. So yes, look, I think we're in for a very strong end of the year in the near term. But more importantly, I think this bull market, we're still relatively early on. I think we'll see the next leg up over the course of the next 6 to 12 months. And I also think it's going to be a much more sustained bull market. When you have a major structural supply deficit as we have currently in the market, and you have accelerating and growing demand as we've seen with a number of newer sources of demand that, again, no one really was expecting even a few years ago. This is setting the stage for a market that can remain strong for years to come.
Okay, so you mentioned that, utilities haven't been coming to the table as much as you thought. So I could say the same, and I think most investors in uranium would say the same and feel a little bit frustrated with that fact. Do you think that that kind of changes the pricing environment going forward, that maybe we'll have a squeeze from now until sometime next year? Or do you still believe in a very long-term bull market, just, going up very slowly?
Yeah, no, it's a great question. I mean, look, the longer that these utilities rely on, flex options and contracts or inventories to, sustain their operations, the more likelihood there is a situation where there is a squeeze, at least for maybe, some utilities, right? I think it's important to remember it's not, there isn't just one big utility out there. There's lots of different bigger and smaller utilities. But I think it's also to understand why there hasn't been as much contracting. It's not that crazy given that you've had a pretty strong increase in the price, rapid increase in the price from just over a year ago, where you had the uranium price, the spot price trading in the, call it $50 to $60 range, $65 range, and then almost or just under, call it 4 or 5 months later, you're in January, it's nearly doubled to over $100 a pound. So you can imagine your contract negotiations are much more challenging especially when they're market price related in that scenario. So I think there's this this new norm where you've got just higher uranium prices, and that's had to set in for a number of utilities. But then in particular in the US, you got to remember, obviously, with the Russian uranium ban and the waiver process, that's basically sidelined most of the US utilities that would have been in the market this year. I mean, that's just gone into effect, and they're still sorting out the waiver process. So I expect that, yes, you will see some new contracting coming into the market that was pent up. We'll see what happens, if there is a squeeze. But regardless, you can delay the contracting, but eventually you do have to contract. And so, it's not like it just goes away. So eventually, whatever pent up demand and need there is for contracting, you will see that come into the market, and obviously that'll be positive for the sector.
So let's talk about mining and how in the world we can make money from this opportunity. You run a company that has a very interesting business model that statistically purely does better than your average junior explorer, because you have a bunch of different projects and you can option them out, do JVs, etc. But you also have your flagship projects, and you can explore them yourself, and you can manage exploration campaigns, etc. Why do you think that in general this business model belongs in people's portfolio? I mean, obviously, I just kind of give it away to say that statistically it does better, but you're also kind of fighting the game of price appreciation versus value. How do you see that, and how would you advise, not financial advice, but in general advise people to build their portfolios in considering project generators as part of that?
Yeah, I mean, look, we have a very kind of unique hybrid model. I mean, there are other companies that do engage in both focused exploration at a project or maybe a couple projects, as well as some prospect generation business as well. But, we've been quite aggressive with both, right? So we've been aggressively drilling our two main co-flagship Russell and Moore Lake projects. In fact, we just announced the commencement of the 2,500 meter follow-up program at our Moore Lake project, which is more focused on resource expansion at the high-grade Maverick zone. We had some great results out in July that I think the market quite liked, 7.3% over 3 meters, relatively shallow mineralization as well. We've had grades as high as 21% at the project at the Maverick zone, over 1.5 meters. So some very, very high grade, relatively shallow, predominantly sandstone hosted mineralization. And we think that those several high grade zones, we can add to that and build out a global resource that would be quite interesting for potentially larger companies, other companies operating in the area. So Moore Lake which has been one of the core projects in the company for almost 8 years now. We've been very active for the first time in actually several years this year, drilling it. As you know, we drilled 3,000 meters earlier this year. Now the big exploration upside really for us is at Russell Lake, where relatively new project, big property, over 73,000 hectares. And again, these are two assets, advanced stage exploration assets, strategically located in between the McArthur River Mine, the Key Lake Mill, and Denison Mines Wheeler River project adjacent to the west, where they're developing the Phoenix and Griffin deposits. And we've got infrastructure, road, power, and exploration camps. So we have some of the lowest cost drilling in the Athabasca Basin of any company, of any exploration company. So it's relatively shallow drilling at both projects. So the high grade zones and potential new discoveries we're drilling into, we're not drilling very deep to delineate these zones. Now Russell is we spoke about earlier this year, relatively new project. We drilled it last year, had some success, but still looking for, higher grade mineralization. And then really a breakthrough as far as the discovery process is concerned, where we announced the best drill result from the project historically, up to 3% U3O8. That was within 2.5 meters of just under 0.8%. So, a significant new intercept in a brand new target that had not been thoroughly historically drilled or explored as a result of power line interference with the geophysics. So it's a very exciting new potential large discovery. We've only really just scratched the surface here. So this next 4,000 to 5,000 meters, which will commence after we complete the drilling at Moore Lake, so probably sometime in October, and we're fully funded for that 4,000 to 5,000 meters, which will take us right through into the holiday season. That program could yield a drill result that really gets the market moving, right? If you look at historical discoveries and exploration programs from some of the well-known names like a NextGen or ISO or Fission, some of the big discovery stories of the last, call it 20 years in the basin, and you look at the steps that led the various results that led to the share price appreciation. We're seeing everything we want to be seeing very early on in this program at the project. And again, this upcoming 4,000 to 5,000 meters, could be the program that delivers that market moving drill result. So to answer your question, we've been very aggressive again with advancing these two core projects. This will be our biggest year of drilling with well over 15,000 meters combined at both projects throughout the year. So it's been a significant year in terms of our focused exploration at those core projects, but we've also been very active with our prospect generator business. And just to kind of highlight some of the reasons why investors should care why it's beneficial. Instead of us having to go out and basically dilute to oblivion to finance and fund exploration and drilling at all these secondary and tertiary projects, we look to bring in partner companies that can earn a majority interest in the project through funding, exploration funding, as well as cash and share payments. So, we typically receive $1.5 million to $2 million in cash and stock a year. We haven't had to raise a hard dollar in a private placement financing since August of 2020. And there's very few other exploration companies in the basin that can say that. We've had cash and stock come in from these various partner companies, but most importantly too, we've had lots of news flow. So we have 7 partner companies, 3 of which are now joint ventures, so they completed their earnings. 4 are still actively earning in. I expect in the next few months, you'll see announcements on some new partners as well. We're in advanced negotiations on a couple of new option agreements, so we're going to be adding to that list. But the current list, the 7 partners that we have, these 7 option agreements represent over 80 million potentially in combined project consideration. So that's cash and stock payments as well as exploration funding, assuming that they complete their respective earnings. So it's a lot of money that comes in to advance the projects, and some cash and shares that come directly to Skyharbour. So the shareholders, our shareholders, get exposure to these other companies. You can own a little bit or have some direct exposure to these companies, the publicly traded ones, through ownership in Skyharbour shares. But you also get, usually at the end of the day, a minority interest, assuming they complete their earn-in. And in some cases, we do retain a royalty as well. So it's a great way to instead of us having to go and, again, raise lots of money to advance these projects, we have these partner companies doing it. Another good way of looking at it is, yes, we do have to obviously give up interest, an ownership interest in the project, but these are big potential discoveries and deposits that you're going after in the Athabasca Basin. So owning, 20-30% of a major new discovery is a very, very, very significant 20 or 30% in terms of value, right? And so, that's the way we view it. So, we want to make sure that, the projects are being advanced, money's being spent on them, and, we have some retained interest in the project or in the company, so that if they are successful, we and our shareholders benefit from it.
And I was just reading some of the news that you put out recently, and I think you have new blood in the company. Can you tell us a little bit more about that?
Yeah, we a very exciting new hire. We brought in a gentleman named Sardar Donmez, who's our new VP of Exploration, joining our team in Saskatoon, with Dave Biard, our head geologist, and Christine McKechnie, our senior project geologist. So, Sardar is a veteran in the Athabasca Basin. He's been working there for almost 20 years, including 17 years at Denison, again, our largest corporate shareholder. And in particular, he spent most of his time there working at Wheeler River, was there right from the discovery through the feasibility study just a few years ago. So this is a significant hire for us, given his expertise specifically in this part of the Athabasca Basin. As you're well aware, Wheeler River, our Russell Lake and Moore Lake projects are just to the east of Wheeler River. So Sardar knows the rocks of the geology very, very well there. He was very excited with the drill hole and the results from Russell Lake earlier this year. I think he sees the potential there, as do we. So a significant hire for us, and he's going to complement the team that we have, and I think he's going to play an integral role in continuing to add value at these various projects.
Cool. So when we talk about, people with a good track record, we always have to match. According to, a little investor that we both know called Rick Rule, that they need to have specific experience according to the job, basically. So not only are you bringing somebody in that has uranium experience and Athabasca Basin experience, but on your side of the basin, which is different. to the western side of the basin.
Yeah, no, absolutely. I mean, look, I think it's a perfect fit, and especially given where we're at with the exploration, the discovery process in particular at Russell, and then the resource expansion drilling that we're carrying out at Moore Lake. He's a great addition to the team.
Awesome. And so going back, where this all began, you had, I believe, some success in mining before Skyharbour. And then for some bizarre reason, you decided to go into one of the toughest commodities on earth. And you had to work for several years in order, to see, the needle really move. And now you're holding on to a very, very nice portfolio that is enviable in your area. And you have, all these high grade hits, deals with Rio Tinto and the likes. Um, why uranium? You could have picked anything else. You could have
Yeah.
just, gone into, I don't know, something sexier at the time. Gold, silver, they come and go, but
Yeah.
uranium is just like, why that?
Well, as Rick Rule, highlights, it's imperative that you're contrarian in this sector, right? So, we just sold a gold company. I was a corporate development manager for a gold company called Bayfield Ventures, which our chairman Jim Pettit was the CEO of, and we had success. We had a discovery. We basically delineated and discovered the extension of a much larger gold deposit called the Rainy River Gold Deposit, which is now an operating mine operated by New Gold. And so, we had success there. Ended up doing a deal with New Gold, and they acquired the company. And it was at that point in 2013 and 2014 where we started putting the pieces together for Skyharbour. So we'd come off of a successful exit there, and teamed up with a number of geologists in Saskatoon that had also just sold their company J&R to Denison Mines. And yes, it was a deep value contrarian opportunity that we saw post Fukushima. No question, there were probably other metals and sectors that would have garnered more interest, but really that was the opportunity, especially in the first few years where we were building up the project portfolio. And just to tie it back in with the previous question about the prospect generator business and the dual model of focused exploration at the main projects coupled with prospect generation. We're only in the position to be able to execute on the prospect generator model because of this, because we were able to acquire numerous projects, top tier exploration projects at pennies on the dollar in these years when no one else was out there, right? So we've, amassed what is now by acreage the third largest mineral tenure holding in northern Saskatchewan, over 1.4 million acres across 29 projects ranging from earlier stage, more grassroots exploration properties. Typically, those we're looking to, option or JV out, right through to more advanced stage exploration assets that either host, multi-percent high-grade uranium mineralization in previous drilling and/or small uranium resources. So it's a very unique portfolio in an exploration company that allows us to engage in both of these businesses.
Right. As the last question, I kind of want to, put you on the spot and ask you, what do you think the spot price of and term price, we only hear of term price really weeks to months after it happens. So it's hard to track. And so, retail cares about spot. Let's talk about that. What do you think spot price is going to hit overall during this bull market? And how high do you think we go this year, 2024?
Yeah, it's a tough question to answer. I mean,
That's exactly why I'm asking you that.
and yeah, and I do think it's important for investors to obviously the market's paying attention, watches the spot price daily, but I think you really want to be watching the long-term price. I mean, if you just followed the long-term price through the summer months and you'd seen the disconnect as the spot price, yes, was pulling back a bit, but the long-term price continued to move higher. That would have led you to kind of probably not panic and certainly consider building on positions or entering in new positions at very attractive valuations. I still think there's, as we're coming out of the choppiness that we saw in the summer, there's still great value proposition. I mean, I've been actively adding to my position in the open market, as have others in the company over the last several years. And so to answer your question, I mean, I think it's going higher, needless to say. I think given the cost inflation that we've seen, your incentive price and your all-in cost of production globally, has been moving higher. I mean, Cameco illustrated and highlighted this point with the tax increase that we saw in Kazakhstan, basically saying now the costs there are basically the same as the costs that we have at our mines in the basin, right? And Kazakhstan was always supposed to be the lowest cost producing region in the world. So you've got that which will drive prices higher. But I think we saw earlier this year, there's more speculation, there's more eyeballs on this space, and look, there was $130 to $140 spot price back in 2007, and there were a number of reasons for that. If we look at that relative to where we are today, we certainly don't have the same supply demand fundamentals. They're much stronger today, even than they even were then. And yeah, look, I think there's again the potential for even higher prices as we work our way through this bull market. I think seeing the steady increase in the long-term price, and yes, some volatility in the spot price, but it seems to have found some footing here at 80. I think this is the consolidation now going into the next leg up. And I'm not going to throw an exact price out there, but I will say I do believe it could go much higher than what we've seen it trade at historically. And most importantly, I think it's going to be much more sustained over a number of years versus what we saw in the mid 2000s, where basically shot up, gapped up, and pulled back shortly thereafter.
Okay, I'll let you off the hook with that one. But just for for the people who didn't participate in the last bull market in uranium, like I didn't either. I was super young and not at all interested in mining. 140-ish US dollars would translate to about, I think, 200.
Yeah, about 200.
Motorbike says yes.
Yeah, in today's
$210 about in today's dollars. So just for context, if we just do as well as last time, that's where we're sitting. So more than
so there's that's a ways from where we are today.
For sure. Okay. Let's wrap this up. Where can people find out more about Skyharbour and what you guys are up to? I know there's going to be lots and lots of news going into the winter.
Yeah, so the website's the best source, one-stop shop for information. Actually, we just updated it as well, new look to it. So you can go check that out at www.skyharbourltd.com. It has all of our contact information there if you want to get in touch directly with myself or our investor relations manager, Nick. All of our information is there. So check that out, and happy to field any other questions. If anyone's curious, you can get the information on the website.
Cool. And just one last word. If you're out there and you're looking at this company, you want to get exposure to a bunch of different projects, and instead of going company to company to company, you want to kind of go into one and not having to do that work of having to follow up with 10 different companies. This is a viable option. These guys have been in the business for over 10 years. And they have very high grade in the Athabasca Basin. I am a shareholder. I am biased. This is a partner company, so don't listen to anything I say, but these guys are finding the good stuff. And I think with the right team as they're building, they're going to find even more of the good stuff. So with that, thank you very much, Jordan. And I'll catch you next time. All the best in your current endeavors. I will be glued to my screen watching for news of all your different partnerships as well as your drilling campaign. Thank you very much.
Yeah, thank you. Really appreciate it.